Good morning, Palantir community. And if you're waking up to this, you're probably having a great day today. 13.5% up in pre-market today. Let me know in the chat that you can hear my Russian accent in your loudspeakers and headphones and wherever you may be getting this. Let me know in the chat you can hear me, because that's like one of the most paranoia things you can have. When you're doing a live stream, you never know if people can freaking hear you or not. Let me know in the chat. We'll appreciate it. In the meanwhile, we started a little bit early. We want to make sure we have stream health right here. Hold on. Okay, we want to make sure we have the stream health is going on. The flux capacitor is fluxing. Everybody's having a good time. We're pushing 14% up in pre-market. Good morning, everybody. Step right in, step right in. We're starting a little bit early. We have an eye on the actual live stream, which starts in 8 minutes from the Palantir headquarters. We're going to cover that. We're going to cover the earnings. Here we go. Here we go. It's going to be a beautiful day. Thank you for letting me know you can hear me. I appreciate it. Good morning to James. Good morning to Jorge, to Rodriguez, to Diogo. Good morning, Monia, Theron. Good morning, Abadayo, Gmar, Stan, Greg. Good morning, everybody. Good morning to Highly Unlikely. Good morning. It's going to be a great day today. Whether it's good or bad, we're going to have a good time. Lots of giveaways today. We're going to have a lot of fun with this. Good morning, everybody. Good morning to Stan. Woo! Who's excited for the Palantir earnings? Who's excited? Let me know in the chat. It's going to be epic. Epic. Hey, good morning to Kayo, Champ, Salvatore. Mwah, ciao. Good morning, Leonard. Good morning, Diogo. Fit like Charles. What's up, buddy? I see you staying in shape. Shout out to everybody who joined in early today. There's 7 more minutes. Good morning to Ali, David, Kunma. I hope nobody puts like a crazy name like Bend Over in the chat, so I gotta read it. Good morning to Mikkel, David, Jesse Dow, my brother from another mother is here. Well, my morning has already improved. Jesse, it's fun to take a break from the geopolitical things. Allow me to mod you real quick right here. I just added you as a moderator. I hope that's okay with you. In fact, I've added you as a managing moderator on the channel. I would love to have you look over and be the responsible adult in the room. As it stands right now, we're looking at almost 14% in pre-market. Just 14% in pre-market. Of course, it doesn't mean anything about the earnings. It is absolutely meaningless. Good morning, Lenny. Yeah, definitely. But as you know, and as I know, that 14% is meaningless. We don't know what's going to happen in the earnings. Nobody does. It's pure speculation. And as you can see, that 13.5, you can also see it evaporate like this if the earnings are not good. And we may see this. Who knows? I mean, we've seen with Palantir every possible scenario ever. I mean, Palantir took us to 40. Palantir took us to 6. Palantir doubled and slashed in half so many times. At this point, we're absolutely used to all of this. I agree with this, Miguel. Yeah, NHS would be incredible, and I think NHS is around the corner for Palantir. I've said it a million times before. At this point, it's a done deal. Yeah, let's get it. We're starting. We're getting hot. Thank you for showing up early. I started intentionally 10 minutes before, ahead of time. Good morning, Magdalena. I started early intentionally so we can get in here and have some fun before the main event, which starts in a little bit, according to my clock, and I'm going to show you on the screen while we look at this beautiful 13.5% in pre-market. I am also here. So we got that going on right now. So 4.5 minutes through the actual presentation by Palantir, which is coming up. S&P inclusion coming 100%. There's 2 certainties about Palantir that have not yet been announced. And I mean, at this point, 100% certain there's going to be S&P 500 inclusion, 100% certain about the NHS contract. It's a matter of time until it becomes public. I've talked about it so many times. Been here since DPO. Wow. That's an OG. Wow, that's a long time. Okay. Now, if there's any trolls here, we're going to ban them. They're going to keep on trucking elsewhere. No problem at all. Hello, Stalek, Crafty, Kevko, Yonde. I hope I'm not butchering any names. Hello, Bill, Killian, Paul. Okay, so 3.5 minutes, and we're going to take a look at the earnings real quick at the news release before the earnings, so we have just a little bit of time. I'm going to pull it up on the screen. Hold on 1 second. Boop, 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 boop. Okay. While I search for that. Hold on, give me a second. SEC filings. Okay. So you guys want to check out what we got? Okay, let's check out real quick before we go through the... I'm going to do it real quick, but we'll vacate the time towards the live stream, and then we're going to go back and review it ourselves. Good morning, Apachico. Hey, Chad, I told you I'm doing a financial content as well. So we have about 2.5 minutes. We can quickly glance at the filings real quick here. Hold on, I'm bringing it up. The stock is up still 13.5% in pre-market. Let's check it out here real quick. So obviously, we're not going to deep dive into this right now. There's two minutes to the live stream of Palantir. It's literally starting in 2 minutes. So we quickly can check out this thing. Is this big enough? That's what she said. Okay, let's check it out here. Okay. So November 2nd, let's do the highlights real quick. GAAP net income of $72 million, representing 13% margin. Fourth consecutive quarter of GAAP profitability. That's S&P 500 inclusion right there. Cool. EPS of 7 cents. Revenue grew by 17% year over year. Beautiful. Commercial revenue grew 23% year over year. U.S. commercial grew 33%. Beautiful results. Government grew by 12%. Customer count grew by 34%. Beautiful numbers. U.S. commercial grew by 37%. Fourth consecutive quarter, expanding adjusted operating margin. Cash from operations, $133 million. Whoever said Palantir is not profitable can eat their words. I mean, it's pretty obvious. Cash and cash equivalents grew to $3.3 billion. Revenue grew by 16% year over year to $2.1 billion. U.S. commercial revenue grew by 23%. A GAAP income of $36 million, 2% margin. Cash from operations, $500 million with 23. That's great margins. Free cash flow, $500 million. Beautiful, beautiful, beautiful. The live stream starts in a minute, so we can glance real quick before we move on. Real quick. Okay, so 17% increase in year-over-year growth. Beautiful, beautiful numbers. Beautiful numbers from Palantir. Beautiful numbers from Palantir. We have 1 more minute, so let's do it quickly. Guidance. Look at the outlook. Very important. $600 million. Beautiful. That's what they're guiding for next quarter. Positivity. GAAP positivity. Okay. So $2.2 billion unchanged. That's the guidance for full year. And raising adjusted income from operations to 607 to 611. And GAAP income profitability for the entire year. Beautiful. Now, I'm going to move back because the live stream is starting. Hold on 1 second. It's literally starting right now. We'll go back to analyzing the numbers ourselves in a second. But I want to make sure we got this on lock right here. So we can watch this thing together. 1 minute. Wait a second. This should be better. I don't think it started yet. But I think it's starting any second. Hold on. Yeah, I have it on full volume. So you guys should be able to hear it. If you haven't yet, before this thing starts, make sure you punch that like and the subscribe button if you haven't yet. Because at this point, we have to play the algorithm game. There's no two ways about it. While we wait, I'm going to say a few more hellos right here for some of our OGs. Good morning to Janine. Good morning to Jordy. Good morning to Karsten. Good morning to Beverly Hills. 4 are enough.
Good morning. I'm Anna Saro from Palantir's finance team, and I'd like to welcome you to our third quarter 2023 earnings call. We'll be discussing the results announced in our press release issued before the market opened and posted on our investor relations website. During the call, we will make statements regarding our business that may be considered forward-looking within applicable securities laws, including statements regarding our fourth quarter and fiscal 2023 results, management's expectations for our future financial and operational performance, and other statements regarding our plans, prospects, and expectations. These statements are not promises or guarantees and are subject to risks and uncertainties, which would cause them to differ materially from actual results. Information concerning those risks is available in our earnings press release distributed before the market opened today and in our SEC filings. We undertake no obligation to update forward-looking statements except as required by law. Further, during the course of today's call, we will refer to certain adjusted financial measures. These non-GAAP financial measures should be considered in addition to, not as a substitute for or in isolation from, GAAP measures. Additional information about these non-GAAP measures, including reconciliation of non-GAAP to comparable GAAP measures, is included in our press release and investor presentation provided today. Our press release, investor presentation, and SEC filings are available on our investor relations website at investors.palantir.com. Over the course of the call, we will refer to various growth rates when discussing our business. These rates reflect year-over-year comparisons unless otherwise stated. Joining me on today's call are Alex Karp, Chief Executive Officer, Shyam Sankar, Chief Technology Officer, Dave Glazer, Chief Financial Officer, and Ryan Taylor, Chief Revenue Officer and Chief Legal Officer. I'll now turn it over to Ryan to start the call.
Palantir is up 14%.
We are pleased to report that our company achieved GAAP profitability for the fourth consecutive quarter, and we continue to drive strong results across our company. In Q3, we closed 80 deals of $1 million or more across 30 industries, 29 deals of $5 million or more across 16 industries, and 12 deals of $10 million or more across 11 industries. Our U.S. commercial business accelerated last quarter, growing 33% year over year. Excluding strategic commercial contracts, it grew 52% year over year and 19% sequentially, and 3/4 of our quarter-over-quarter growth is from customers that started with us in 2023. Our U.S. commercial customer count rose 12% quarter over quarter and is now tenfold what it was just 3 years ago. Deal count for our U.S. commercial business is 2.4x what it was in Q3 of last year, and U.S. commercial TCV closed at $252 million, up 55% year over year on a dollar-weighted duration basis. We're also seeing the acceleration of larger deals and shorter times to conversion and expansion, including a multi-year deal in excess of $40 million with one of the largest home construction companies in the U.S. that started a pilot and converted all within Q3. This growth is in part due to AIP's continued transformation of the way we partner with and deliver value for our customers, and we expect AIP's impact to continue to intensify. The rapid expansion of AIP at both our existing and new customers and the impact it is having on their operations is nothing short of remarkable. In the last quarter, we reoriented our go-to-market approach around AIP bootcamps, which has allowed us to deliver real workflows on actual customer data in 5 days or less, versus our traditional pilots, which generally take 1 to 3 months. We're seeing different stakeholders at the table, including tangible engagement from IT, a quicker time to value for customers, a wider range of organizations partnering with us, and the ability to have multi-organization bootcamps. Early indications point to vast improvements on our unit economics, from initial contact to customer conversion, all while accelerating new customer negotiations. Bootcamps are also driving contract expansions. We're on track to conduct bootcamps for more than 140 organizations by the end of November. Nearly half of those are taking place this month alone, which is more than the number of U.S. commercial pilots we conducted all of last year. In these bootcamps, our customers attack problems that have immediate impact and learn how to deploy AI into their unique operating environment in a matter of days. Our customers' results speak for themselves. One attendee said that we achieved more in 1 day for them with AIP than one of the top 3 hyperscalers had accomplished over the last 4 months, and then presented their work with Palantir instead of the hyperscaler to the CEO the very next day. Another attendee said, "We basically build 10x faster with 3x less resources." And yet another claimed, "We have built in a day what they wouldn't be able to get internally in months." and then it probably still wouldn't meet the requirements. AIP is being used for a multitude of workflows at customers across the globe. Just a few examples include the following. Our partners in the healthcare space, including Tampa General, HCA, and Cleveland Clinic, are using AIP for dynamic scheduling, turning software from a place of data entry into a provider of operating leverage. Aramark is using AI to procure more efficiently, generating custom, proactive negotiating strategies. Panasonic North America is using AIP to scale its workforce and accelerate how quickly new engineers can level up. Eaton is using AIP to more efficiently deploy fixes by identifying available materials across different plants or assembly patterns. Carrefour Brazil is increasing the fill rate of online grocery orders with higher accuracy. The energy and engagement around AIP is unlike anything we've ever seen. The potential market for AIP and the trajectory of possible AIP growth for our business is massive. We almost tripled the number of AIP users last quarter, and nearly 300 distinct organizations have used AIP since our launch just 5 months ago. We will continue investing meaningfully in bootcamps as our go-to-market strategy for AIP. Through all of this, we never forget that we are a company built on a foundation of counterterrorism. In response to recent world events, we continue to be dedicated to our founding principles of supporting the most important missions in the world, including providing intelligence and defense capabilities to global allies. In that vein, our impact has never been more compelling. We have the products now that the world needs. We expect our U.S. government business to re-accelerate beyond the current growth rate of 10% year over year, given increasing demand for those products to support our allies around the world. While we continue to expect near-term uncertainty given budgetary environments, we were encouraged by the pickup in activity at the end of the U.S. government fiscal year, and we feel well-positioned for long-term growth through our evolving strategy, which Shyam will speak to further. Just several weeks ago, it was announced that the Army awarded us a new contract worth up to $250 million over 3 years to provide additional capabilities in support of COCOMs, armed services, intelligence community, and special forces as they continue to test, utilize, and scale AI and ML capabilities. As we enter the final months of the year, we are steadfast in our focus on AI and unlocking the impact it can have for our customers. We look forward to continued business momentum through year-end and are excited for the opportunities to continue delivering unmatched impact for our customers into the new year. I'll now turn it over to Shyam.
Thanks, Ryan.
Beautiful.
At AIPCon 2 this past September, I unpacked some of the foundational engineering challenges that we've solved to deploy LLMs that are anchored in your data on your private network and to safely orchestrate your enterprise with tools, actions, and other AI models. The core concept of the K-LLM kernel enables you to reliably harness LLMs for critical workflows, to manage the risks in the underlying models changing out from underneath you, and to create the shortest and safest path to put your own fine-tuned models into production. Why use one LLM when you can use K? The art is in synthesizing the outputs from this committee of experts to create a rich topology of answers to the prompt. LLMs are statistics, not calculus. It's more like predicting the weather than predicting an eclipse, and that's why we're focused on proof, not proofs of concept. AIP gives our customers the infrastructure they actually need to ship production use cases quickly. This difference has been so profound that we shifted the entire commercial organization to focus on 1 to 5 day long customer boot camps, where organizations exit with a scalable use case on their actual data that they built for themselves. Customers leave so excited with this definite, optimistic view of what can be accomplished and how they'll drive transformation in their organizations. And these boot camps have created enormous tailwinds with IT attendees for 2 reasons. First, we're defining the most advanced and valuable reference architecture for Gen AI in the enterprise. And second, with the release of virtual tables and Foundry, IT's primary objection of data duplication is eliminated. We're running more boot camps per month than we had US commercial pilots all last year. These boot camps really allow the customer to experience 3 magic moments for themselves. First, that you really can't use LLMs without tools, that elegant integration of algorithmic reasoning to unlock the full potential. Second, that the object, in other words, the rich representation of your enterprise and its state, and not chat, is the prompt. Or said differently, the bootcamp experience enables them to transcend chat. And finally, the power of live integration of expert feedback through the AIP infrastructure to efficiently generate adaptive models. At the end of the bootcamp, customers say things like, once you see it, you can't unsee it. As Ryan mentioned, it's common to hear attendees express that they could do in days what they couldn't previously with other AI technologies in months. In September, we also launched Palantir Government Web Services to expand Palantir's mission by supporting and growing today's nascent but inspiring defense tech ecosystem. Through Palantir GWS, we're providing emerging and existing companies in the defense industrial base with the enabling software to quickly operationalize their mission-critical capabilities at scale, all aimed at minimizing the valley of death and bringing the best of America's greatest advantage, software, to the fight. FedStart and Apollo are the first offerings in GWS. FedStart's platform accreditation as a service offering radically compresses the timeline and cost of unlocking IL5 markets and beyond. Apollo's autonomous software delivery platform is the most technically mature and sophisticated approach to continuously delivering complex modern software to the thousands of edge environments required to deter and defeat threats in the Pacific. FedStart customers like Calypso AI and Primer AI, and Apollo customers like Lockheed shared their acceleration journeys at our Software for Government conference hosted in our DC offices in September. The reaction to Palantir GWS has been amazing. VCs, defense tech entrepreneurs, and government PMs are responding to the investments in a big tent ecosystem and the efficiency and scale that we're providing. We also launched our mixed reality service and Immersive C2, an application that was built on the mixed reality service at the Army's AUSA conference in October. It was met with rave reviews. Our Immersive C2 application showed how command and control could be done on the move in the back of a vehicle, leveraging mixed reality headsets built on GWS infrastructure. And our mixed reality service will mean that any application that builds on or integrates with GWS can instantly enable their own mixed reality offering. Finally, our products could not be playing a more central role for real-world events. It's incredibly rewarding to see the products that we've built over the last 20 years meet their moments, often in new and impactful ways. From Meta Constellation, which is enabling tactical overhead imagery in the field, to Gaia for mission planning, to even Foundry for complex video imagery and audio analysis and automation. From the Mission Data Platform and its real-time cross-domain collaboration across allied nations to Maverick for target effector pairing and advanced fires execution. These real-world events validate the investments that we have made over the last 5 years and strengthens our conviction in what we are building now for the future. And with that, I'll hand it over to Dave to talk us through the financials.
Thanks, Sean. We had an exceptional quarter. Revenue growth re-accelerated on the back of our U.S. commercial business, driven by our intense focus on AIP, while margins continued to expand, demonstrating the transforming unit economics of our business. We beat the high end of our guidance range on both top line and bottom line, and increased our Rule of 40 score 800 basis points quarter over quarter to 46, while simultaneously delivering our fourth consecutive quarter of GAAP profitability, the first time ever that we are GAAP profitable on a trailing 12-month basis. We also delivered our third consecutive quarter of GAAP operating profit and over $500 million in adjusted free cash flow over the last 4 quarters. Turning to our global top-line results. Third quarter revenue re-accelerated to $558 million, up 17% year over year and 5% sequentially, exceeding the high end of the range of our prior guidance. Excluding the impact of revenue from strategic commercial contracts, third quarter revenue grew 21% year over year and 6% sequentially. Revenue from our largest customers continues to expand. Trailing 12-month revenue per customer from our top 20 customers increased 13% year over year to $54 million per customer. Customer count grew 34% year over year and 8% sequentially to 453 customers as we remain focused on landing new accounts. Now moving to our commercial segment. Third quarter commercial revenue grew 23% year over year and 8% sequentially to $251 million. I'd like to congratulate the entire commercial org for reaching a $1 billion annualized run rate milestone this quarter. It's quite an achievement. Excluding the impact from strategic commercial contracts, commercial revenue grew 34% year over year and 11% sequentially. In the third quarter, U.S. commercial revenue re-accelerated to $116 million, up 33% year over year and 13% sequentially. Excluding revenue from strategic commercial contracts, U.S. commercial revenue grew 52% year over year and 19% sequentially. We continue to see the impact of our intense focus on AIP on our commercial business, both through the adoption of new customers and the expansion of opportunities at existing customers. We booked $252 million of U.S. commercial TCV, representing growth of 55% year over year on a dollar-weighted duration basis. Our U.S. commercial customer count grew to 181 customers, reflecting 37% growth year over year and 12% sequentially, benefiting from the increase in velocity of our AIP go-to-market motion. This represents a tenfold increase in U.S. commercial customer count from when we went public just 3 years ago. Our international commercial business was up 15% year over year and 4% sequentially to $134 million, as we continue to capitalize on targeted growth opportunities in Asia, the Middle East, and beyond, while conditions remain challenging in continental Europe. Revenue from strategic commercial contracts was $15 million, or 2.6% of quarterly revenue, down from $19 million in the prior quarter. We anticipate fourth quarter revenue from these customers to continue to decline to between $13 to $15 million, representing 2.3% of expected fourth quarter revenue. Shifting to our government segment, third quarter government revenue grew 12% year over year and 2% sequentially to $308 million. U.S. government revenue grew 10% year over year and 2% sequentially to $229 million. While it's hard to predict exactly when our government revenue will reconverge at historically high CAGRs, as Sean mentioned, our products, PG, Gaia, MetaConstellation, and AIP, are needed in battlefields across the world and even more so in the current geopolitical landscape. International government revenue grew 21% year over year and 2% sequentially to $78 million, bolstered by our continued work in healthcare and defense. Moving to bookings, TCV booked was $830 million, up 29% sequentially. Net dollar retention was 107%, impacted primarily by headwinds from our commercial business in continental Europe. Net dollar retention does not include revenue from new customers that we acquired in the past 12 months and is therefore not reflective of the recent acceleration in our U.S. commercial business. We ended the third quarter with $3.7 billion in total remaining deal value and $988 million in remaining performance obligations. As a reminder, RPO is primarily comprised of our commercial business, as it does not take into account contracts with an initial term of less than 12 months and contractual obligations that fall beyond termination for convenience clauses, both of which are common in most of our government business. Our U.S. commercial business saw total remaining deal value growth of 23% year over year and 27% sequentially when excluding the impact from strategic commercial contracts, highlighting the acceleration of our go-to-market motion. Turning to margin and expense, adjusted gross margin, which excludes stock-based compensation expense, was 82% for the quarter. Adjusted income from operations, which excludes stock-based compensation expense and related employer payroll taxes, was $163 million, representing an adjusted operating margin of 29%, 400 basis points ahead of the high end of our prior guidance and marking the fourth consecutive quarter of expanding adjusted operating margins. Q3 adjusted expense was $395 million, down 1% sequentially and flat year over year. In short, we've been able to flatline expenses for 4 consecutive quarters while investing significantly in our products, including AIP, and re-accelerating our revenue. This drives home the efficiency and operating leverage of our software at scale. R&D adjusted expense was up 9% year over year and 11% sequentially, demonstrating our commitment to continuously drive forward product innovation and invest in technical talent. Over the past year, we have emphasized our unwavering dedication to sustain GAAP profitability and GAAP operating income. Our 4 consecutive quarters of improving GAAP operating income enable us to more aggressively invest in AIP. Looking ahead to the fourth quarter and beyond, we remain focused on calibrating expense growth below revenue growth, even as we increase investment and resourcing to AIP and in specific geographies around the world. In the third quarter, we generated GAAP operating income of $40 million, our 3rd consecutive quarter of GAAP operating income. We also generated GAAP net income of $72 million, representing a 13% margin, our 4th consecutive quarter of GAAP profitability. This is the first time we have ever achieved both GAAP net income and GAAP operating profitability on a trailing 12-month basis. While we continue to manage our stock-based compensation expense, as I mentioned in previous quarters, we expect it to trend up in Q4 as we continue to invest in AIP. Third quarter adjusted earnings per share was 7 cents, and GAAP earnings per share was 3 cents. Additionally, our combined revenue growth and adjusted operating margin accelerated to 46%, an 800 basis point increase to our Rule of 40 score from the prior quarter. We will strive to maintain this exceptional balance of top and bottom line performance. Turning to our cash flow. In the third quarter, we generated $141 million in adjusted free cash flow, representing a margin of 25%, and $133 million in cash from operations, representing a margin of 24%. Over the past 4 quarters, we've generated $490 million in cash flow from operations and $502 million in adjusted free cash flow, marking the first time we've exceeded $500 million in adjusted free cash flow on a trailing 12-month basis. We ended Q3 with $3.3 billion in cash equivalents, and short-term U.S. Treasury bills. We retain access to additional liquidity of up to $500 million through our revolving credit facility, which remains entirely undrawn.
No debt.
Now turning to our outlook.
No debt.
For Q4 2023, we expect revenue of between $599 and $603 million, adjusted income from operations of between $184 and $188 million, and GAAP net income. For full year 2023, we are raising our revenue guidance to between $2.216 and $2.22 billion. We are raising our adjusted income from operations guidance to between $607 and $611 million, and we continue to expect GAAP net income in each quarter of this year. With that, I'll turn it over to Alex for a few remarks.
Welcome. I don't think the camera's working. Welcome to our earnings. Obviously, current events and the performance of our business are an absolute validation of our strategy of building the world's most aligned and powerful enterprise products years, sometimes decades before they're needed, before you could imagine their power. AIP in U.S. commercial not only is disrupting the market, it's setting a standard that I don't believe any other software company will be able to reach, partly because they've misunderstood the value of LLMs and their relative importance and lack of importance, partly because they don't have decades of experience on the front line as we do in the military with managing the core ways in which you make these things precise, the way in which you provide governance. Also because the playbook backed by venture capitalists and supported by analysts has always been make the thinnest technology possible that is misaligned with your enterprise and hire the most and best salespeople so the enterprise gets moderate value while having its high revenue exported in a parasitic manner to the cheers of insiders and the pain of retail investors. And we obviously rejected that. And then on the mission side, we have been saying and building products for a world that is violent, disjointed, irrational, a world in which you have to show strength, a world in which if you do not show strength, people who are biased, xenophobic, dare I say anti-Semitic, will rear their head. A world in which you really have to pick sides. Palantir is the first major company to, in my view, to have said from the beginning a thing that is obviously true. There is no such thing anymore of being on all sides. Palantir only supplies its products to Western allies. We've never supplied our products to enemies. We proudly support the U.S. government. I am proud that we are supporting Israel in every way we can. And we also support plain English speaking. So when people are massacred to the equivalent of almost 50,000 people in Israel, we view it as a terror act. We call it terrorism. We supply our product to people who are fighting terrorism, and we have no problem with describing as it is or sticking up for our allies. And, and we don't provide false context. All of a sudden, you need a lot of context for describing what it means to kill Jews or persecute Jews across the world. I believe in context and where in places where you need to actually provide it. But at Palantir, we have seen that our view of the world, which is that there really are people that are violent and not in conformity with morality, need to be fought. And we are supplying these products that we've built over the last 20 years to our allies, and we are proud of the results. And I would say also, even commercially, you are going to see that our alignment with our client, our alignment with our society, pays major dividends. And for those of you who are along for the ride, we really celebrate you. and we are going to bring our warrior culture to our products, to our market fit, and the results of which we are going to bring to our allies.
With that, we'll begin with a few questions from our shareholders before we open up the
I love Alex.
Our first question is from Christopher. The current situation in Israel has opened the eyes of other allied countries around the globe. Specifically, are there current or future plans of supporting our allied partners in Asia with Palantir products?
Absolutely. The short answer is yes. I think not only can we look at Israel, but we can look even before that at Ukraine and the lessons that we've learned there. And I would distill that down simply to that you must pre-position data, software, and hardware well ahead of the fight there, and create a partner mesh network of command and control nodes to really provide a difference here. So that's one major thing. And so we're spending a lot of our time and our energy thinking about how do we get as much mass west of the international date line as possible to be prepared to meet those moments. And make no mistake, there's a lot to be done there. The other lesson specific from Israel is how much faster you can move when you create a big tent tech ecosystem that allows you to bring a lot of other defense tech startups along with you. The capabilities that we were able to give the Israeli government by bringing in other Israeli startups as well as international startups was incredible. And that's a key lesson that we're taking forward with us as well. And it's embodied and enabled by Palantir Government Web Services.
Thanks, Sham. Our next question is from Sony. Congrats on well-executed AI bootcamps delivering tangible value very quickly. Could you kindly attempt to synthesize the top 3 observations from those bootcamps for enterprises to launch AI-enabled decision management systems to power forward their critical objectives?
Sure, I'll take a first stab at this. I would say, one, it's about the magic moments. So the first bit of this that I think people get out of it is, what does it viscerally mean to understand that you can't really use these LLMs without tools? So how do you bring that tool bench forward? 2, it's a realization that the semantics of your business ought to be the prompt. And we are uniquely positioned there because the best way to do that is to serialize those semantics into your ontology, to use the object model that we have to do that. And so
Which we'd already built and deployed. One of the most interesting things about the commercial market is there are all these tools we built that basically not only allow you to manage LLMs, but they basically pen test your enterprise. So is de facto what in the past where you were selling was misaligned with your enterprise. AI forces an alignment with your enterprise, and so you begin to ask really business relevant questions. And then because of essentially our ability to take the knowledge of your business and put it into the LLM and then extract from the LLM something relevant and then manage it, you get both the power of the LLM and you get the shock moment of the enterprise actually saying, wait a minute, you're providing me something that actually is good for my enterprise. Quite frankly, it's almost like taking an alcoholic off alcohol and saying, here's your health drink. And it's like, and the reason why it just is very, very hard to compete against that is because the other players in this space are actually built to take you away from what is good for your enterprise. How do you make better margins? How do you make your products more safer? How do you take the tacit knowledge of a Japanese manufacturing company and build in America with all the advantages of America and the tacit knowledge of Japanese manufacturing? Like, that's what we're actually doing with these things. And then there's all these things we've built that would take decades, years and years and years to build, even if you understood them, that we'd already built.
And to add on to that, about the Japanese example shows it. I think the third major magic moment that's impactful there is this incorporation of real-time expert feedback and thinking about feedback as a data type unto itself, not having to retrain or upgrade the parametric knowledge of the model, but actually being able to use feedback dynamically live to create an adaptive model.
And then, and I'm sure Ryan will talk about this, the scale function of this. It's like one of the logical questions is if you're doing well, why are you so happy that you have 40 million in operating income? Well, it's because the unit economics are so good moving from boot camp, from pilots that took 6 months to boot camps that take officially 2 days. I was in one that took 6 hours, are so efficient. It's like we're like, there's a limit to how much resources we can pour into this. So we're like doing all these things and we're educating people and we're doing it at a scale that is equivalent to already 1 month is as much as we did all year last year.
Yeah, and with our relentless execution, we're seeing the ability and how much easier it is lowering the barrier for customers to see our product applied against their data in real workflows. And so we're seeing the network effects of that. We're seeing customers who have used AIP in one context going to new companies, adopting it at new companies, and converting quickly. We're seeing customers that were with us years ago who are coming back to us because we have the product now that works for what they need. And we're seeing that in a way where they maybe tried to build themselves and failed, and they're now able to implement it effectively and quickly in that environment. And the vast kind of expansion and advancements of our products are showing that at our customers.
And one of the things that, I'm very bullish on the U.S. and quite frankly, a little bit less bullish in every place else. But one of the things that's amazing about the U.S. is people change jobs and people know how good our products are. And the minute they change their job, they call us. And some of the results are, if you disambiguate and normalize the results to take out SPACs, U.S. is growing 52% off of a large base, which is why I think we can accelerate it to a $1 billion run rate by 25. But it's because the dynamic, how dynamic America is, and people moving around taking the product, combined with our ability to execute in a new commercial motion that is just literally a game changer for how we go to market. And by the way, we always kind of neglect to mention this. It's also a game changer internally. Like culturally right now, partly because we're on the front line fighting what amounts to evil, partly because a lot of people don't agree with us, and those that do realize that they need to stand up and stand with us, and partly because we were right about what you should supply to U.S. commercial. It's just a really good vibe internally. It's like we're really, it's really fun to crush it. And quite frankly, it's occasionally fun to watch your, apparently perfect fake competitors deliver things that don't work, and to watch us walk in with our crazy show and deliver things that do.
Thank you. Our next question is from Samid, who asks, does Palantir view the USG hardware primes as allies or competitors?
We view the primes as allies, and government, Palantir Government Web Services, it really enables this. So 2 of the primes are customers of Apollo. 2 of the primes are using Foundry to improve internal production and systems integration. Another prime, Northrop, has joined our Titan team. And I think from our perspective, America needs her primes. Like, our national security depends on them. There's a lot of talk in defense tech circles about disrupting the primes. And I think there's incredible opportunity to transform what's possible with software, which in my opinion, we're leading. But fundamentally, they're crucial to our national security. And that's because production does matter. You have to bend metal at the end of the day. And using 10 years of munitions in 10 weeks in Ukraine really underscores that point. But increasingly, production is itself software-defined and optimized. In fact, that's most of our commercial business, helping Airbus with the A350 and single-aisle ramp-up, helping BP produce more hydrocarbons, helping Panasonic build more batteries for Tesla cars. Like, that sort of transformation and efficiency is what we want to bring to the primes as well as they bend metal.
Maybe what Sham has done a really magnificent job of is, it's fair to say the primes thought we were competitive with them until recently, and not just primes but others, but because really to get access to the kinds of data that the Pentagon has, you're going to need either Palantir or be able to build something like Palantir. And I think, in all modesty, people have realized it's pretty damn hard to do what we've done. And so there was this kind of perceived misalignment, and what Sham has been building out with FedRAMP is giving people a way to partner with us where they can extend what they're doing without having to try, which everybody still does, but is commonly known will not work, the ability to have access to the underlying data for reasons that are highly technical. It's crazy hard to do. And so getting that full alignment is both much better for Palantir and much better for the nation. And then we're, of course, interested in it because we're pretty mission-focused and we want the nation to function better. And we're also realistic. It's not good for us to be fighting battles. We know we're much better at software. We have no interest in going into hardware. I think increasingly they know they should not fight us on software, although some still do, which is largely stupid.
Thank you both. Our next question is from Mariana with Bank of America. Mariana, please turn on your camera and then you'll receive a prompt to unmute your line.
Good morning, everyone. So I have 2 questions for you. Number one is on the government side, all these geopolitical events, we have seen all these countries moving really fast to actually enhance readiness, and modernization is a key asset. What is your expectation for the US actually moving at the need of speed, or like speed of need, under a more bureaucratic, usually more bureaucratic environment? And the other one is AIP. You have discussed already how it changed, or it was a catalyst for customers to be able to adopt data analytics and data infrastructure. But I'm interested to understand, beyond boot camps, what else is changing internally, how you face customers, how you do things with AIP, and how that is impacting your margins, because they look like 30% operating margins now versus the 25 that you were printing before.
Maybe to start with the second one here with AIP, I think you should really think that, the boot camp is more than just what's happening in the boot camp, because you're exiting the boot camp with a series of use cases that are production ready or near production ready that you can go forward with. You're exiting the boot camp with, as the customer, and usually IT, with enough hands-on experience with the product that you can actually keep going and compounding it going forward. So there's this exit velocity that's fundamental to it, where it's not just the go-to-market motion. It actually now becomes the implementation motion. It becomes the way in which you engage with partners, because now partners can run their boot camps. Partners can drive use case growth for themselves around what came out of the boot camp and the exit velocity around that. So I think it's quite profound in why you're seeing both our emphasis of it and the impact that it's having on both the financials and the operating reality of the business.
Yeah, as we mentioned on the last earnings calls, we were focused on usage and value of AIP, and we're seeing that, by the end of November, 140 organizations will have delivered boot camps to, and we're seeing that and then the conversions that flow from that as well.
And to put that number in perspective, I think roughly 70 of those boot camps will happen this month in November, which is more than the number of commercial pilots we did all of last year. So the velocity
and
scale.
And we're just starting. So like we're ramping up to doing them. Yeah.
And then I guess on the margin side, what you're seeing is like we are investing, pretty significantly. R&D is up sequentially 11%.
But I think the thing that is confusing is our go-to-motion now in US comm is so efficient. So you could basically look at it as 10x more efficient, and we are ramping it up. But this is the most efficient way for us to go to market. So it's like it's not constrained by dollars. It's constrained by, do we have people that actually know the product? Have we trained them? There's not a way in which we can efficiently, because if you're growing a business 52%, the obvious thing is you should be dumping money on it like a bonfire, especially if it's the only market that actually really matters in the world. And by the way, if you're recalibrating the standard. One of the things we did with PG, we did with Gaia, we did with Meta Constellation, it's not just that we win clients, it's that we set a standard that the competition can never meet. And that this is really important for our go-to-market strategy. It's like, you can pretend you're going to build PG. The French government announces they're going to rebuild it for $40 million. You can't rebuild PG for $40 million. You can't rebuild it for $1 billion. You need us. You can't rebuild Foundry. You can't rebuild Millicon. When we go to market with AIP, the clients are learning two things. They're learning, oh, I could use this. They're learning how to use it. They're also now going to go to every other vendor and say, but I want my thing to provide operational results. And Palantir has done this in 6 hours. I like you better. I'll give you 6 days. I prefer you. Your steak dinner is better. Your suit is better. Your backing from the analyst is better. You don't have the madman sticking up for things that are good and right in the world, despite them being unpopular. And you get all that. I'll give you an extra 10 days. Well, try that with PG. It's ridiculous. Try it with Foundry. It's ridiculous. Try it with Meta Constellation. No one even bothers trying that. No one tries this on Gaia. And they're not going to try it on AIP either. And that's one of the most important things we do as a company. Because in the end, it is actually very attached to our mission. My view of what we should do is build products that are so good that the competition stops competing, whether that's in commercial or on the battlefield. And that's what we're doing. And that's what we're seeing in AIP. And I haven't seen something like this since PG, which is our first anti-terror product. No one bothers even, like currently PG is blocked in Germany. That's because somebody doesn't, whatever. It's like they're waiting for a terror attack so the AfD can win. It's like insane. So any case, no one's bothered saying we should build another PG. You can't build it. So you can just opt to not have the product. There'll be people who do that. And that's the aspiration for every single one of our products. And that's what I see in AIP.
Thank you all. Alex, is there anything you'd like to say before we end today's call?
As usual, it's a wild ride if you're an investor or if you're an employee internally. There's this term mission-driven culture, which I increasingly don't like because almost everyone's saying it. It's just waiting to get tendies and then drop their mission and be a sophist. But in fact, we are believers, we are fighters, and we are a mission-driven culture. And we welcome everybody who wants to participate that as an investor or as a Palantirian or someone who follows us.
Thank you. That concludes Q&A for today's call.
Say attack! Attack! Come on, man. Yo, Dom, I was waiting for him to go with the attack thing.
I'm pumped, man. Dude, look at all the notes that I've taken. Like, I couldn't take them fast enough. I need a copy of the transcript. Man, I'm a proud shareholder today. Very, very proud shareholder today.
So let me introduce you first of all to the 1,500 people in the chat today. First of all, the stock is up 16% last time I checked, which is not something we're used to seeing every day. 17% currently up in pre-market. Dominic Rinaldi is in the house. The main flaw of Dominic is he's a Cowboys fan, but nobody's perfect.
Hey, it's been a sad 30 years.
It's been a sad career. Dominic comes from the same world. He works for a big company. I'm not going to name any names, for a big company. He's an executive in this specific field Palantir is operating in. He's very well versed in data and SaaS, and he's been doing this for a living. He called the NVIDIA spike very early on. He called the Palantir spike when it was at the very bottom. He is the most underrated, undersubscribed, underfollowed account on social media with actual hands-on managerial experience in the field. Without further ado, Dom, if you took some notes, the floor is definitely yours.
It's a very kind intro.
I would love to hear your thoughts about these earnings, and then we can have a discussion.
Yeah. Where to begin? Well, first off, let me just say I'm a proud shareholder for the honesty and transparency that he spoke up about Israel. Let me just put that out there right
100%.
there. Calling a spade a spade.
100%.
And you know, they said this years ago that the world was going to get more disjointed and evil growing in the world. Let's just call it what it is. And their product helped stop that. So I'm definitely a proud shareholder from that perspective. They had a beat on every single metric. I was cross-referencing Q2 from every single metric. Big one that I was looking for was, what was the customer growth like? And then show me that the time to value and adoption of the product is speeding up. And they specifically are doing that with these boot camps going from 1 to 5 days, which the retail community has been saying this for a long time, right? Just get hands on keyboards. Like Coach Rap, we've had many conversations about this. Just get people's hands on keyboards to see the technology in action, right? With real data. And then from 1 to 3 month pilots to 1 to 5 days, huge difference. And I love the quote, how he ended. He said, "We're not strapped by dollars in this activity to grow our business. We're strapped by the amount of people that know the technology to get customers using it," right? Because it is a process to ensure they have very well-educated, forward-deployed engineers helping these companies use their data and build these apps. Coming from this world, I will tell you, and why I became an investor in the beginning of all this was their software model is unlike anything else. And what I mean by that is that they show quantifiable value, right? Proven value that I will deliver to your business, and I will help you solve those problems in an acquire, scale, or expand scale phase. I'm willing to lose money on my first 2 parts of my business because I am that confident our technology is that good. You will receive that value, and then we will discuss contract negotiations because you will not want to leave that. And that has not changed. No other software company that I've seen in the market does it just like that to that degree. I think we're seeing the market understand that customers are wanting problem solvers, and also the amount of IT now being transformed into being responsible for transforming the business in that shift, that paradigm shift. It's not about keeping the lights on. It's about how are you driving the business forward and adding value. And their product does that.
Dom, I want to ask you a question. And I think when I was younger, I met a guy. I don't want to say his name, but he was the CCO at the fund I was working on. CCO is Chief Compliance Officer. Former D1 athlete, stand-up guy. Taught me a lot of lessons about life when I was really like a kid. And he told me, look, if you want to get ahead in this business, you have to bring more answers than questions. You're going to come back with questions. You're not adding any value. Bring more answers than questions, which is exactly what Palantir has been doing. And the longer you wait, right? The faster the fundamentals and the stock price converge. They can be sometimes misaligned, but eventually, the longer you wait, it's going to catch up. So my question to you, right, as somebody who comes from this industry and who works for a living and working with SaaS, where do you see Palantir go for the next 5-10 years, like more in the long horizon?
Yeah, I mean,
not on the stock price, just in general, the business. We don't care about the stock price.
No, and that's why I'm invested in it. Like, I mean, I've really consolidated my portfolio to at the end of the day, my top 3 positions are like 70% of my net wealth. It's NVIDIA, Palantir, Tesla, very, very highly concentrated. And
by the way, every time you talk, the stock goes up by another %. It's already 18.
Oh, that's great. Keep talking. I think they will be one of the most important software companies in the world, period. I don't see our world getting any more congruent or aligned from a geopolitical perspective. I love the question that they asked, would Palantir help out in Asia with Western allies? Because we know the challenges that Taiwan and others are facing. And their government business is lumpy. Government will always be lumpy. But the amount of impact that they have for the world, and that's that steady cash cow that will continue to grow. I could see them being a true competitor to a Microsoft or someone. They may not be widely diverse in everything, but they're like the picks and shovel of AI and actual getting value from AI. So that's what I would say to that. So, I mean, I'm not going to make any price predictions, but I definitely expect in 10 years to make 10x on this.
So that's a bold prediction and a tall order.
Very bold prediction.
It is, but
Dom, I wanted to introduce you to one of my good friends, our friend Micha. He's here.
Nice meeting you.
He's a wonderful, another undersubscribed, underrated channel on YouTube. Dom is in a very similar position. So since you've been so kind to join us for a few minutes, and I know you're super busy, I would like to get your kind of raw comments, raw reaction about the earnings from Palantir.
Actually, the story of Palantir, before we talk about the earnings, which you did a stellar job going over, I didn't start by being a YouTuber. Actually, I started my previous career was managing one of the analytics business in one of the biggest companies in Israel called NICE. And the fierce competitor always was Palantir. Their level of, when people didn't even talk about AI, machine learning, all that, they already had that. We were lucky that at that time, that's, I want to say 6-7 years ago, they were focused on military. So we were focused on let's call them regular companies. They were focused on military, and we were lucky. But we knew that they had very, very strong product. And one of my first videos on the channel was saying that Palantir is an amazing company. Now, the biggest challenge that investors have, retail investors mainly, is to distinguish between a company, again, not even talking about fundamentals, talking about the product and the stock price. Especially in a company called Palantir. And Tom, if you go back, let's say, just click the 5 years there, and everyone would see the fluctuation between the high price of the roaring 2020s versus today, you might say, oh, it's a crappy company because the stock went down. But basically, anyone that sees or looks at Palantir's product, customers, and I want to even give everyone a hint on the fact that probably, and you talked about that, 3 to 4 months from now, they're going to be probably, and this is not a promise, but probably, they're going to be included in the S&P 500. Now, in 4 months, you're going to see the push notification saying S&P is rebalancing and Palantir isn't going to be included. It's going to go up 15%. The question is, will it go up 15% from 14.92, or actually right now probably around 20, or from 40? And if you ask me, it's probably going to be from the latter. So amazing fundamentals. They keep delivering. And I'll end with one thing that Alex Karp said. He stands by Israel, period. He's not blinking. He's not saying, we support everyone. He's saying it point blank. He's on the side of truth, of civilized people, not of terrorists. He's not trying to sugarcoat anything. He's a straight shooter. And just like I like the craziness of Elon Musk, the craziness of Alex Karp is the same.
I'm right there with you. I didn't see any other CEOs buy an ad
Exactly.
in New York, the newspaper, and say, we stand by Israel.
Yeah.
Right? Spent money of his own company just to let you know where we stand. And both of those gentlemen have made a very extremely positive impact on the world. So it's great to be a shareholder.
Yeah. And I'm amazed by the fact we have a Cowboys fan and a Jets fan in the same room. That's what Palantir does. It brings together all the losers.
we can have.
Hey, Michigan hasn't won a title in a while, Tom. Michigan hasn't won a title in a while.
That is true.
We can have a long discussion, which I wouldn't really understand how come the Cowboys still have fans, but that's a different discussion.
Hey, you can't call me a bandwagon fan. It's been a long, sad 30 years.
Exactly. But the value of the franchise is still going up, and except an Amazon series, which was very nice.
Yeah. He's a good businessman. He just needs to let his players play.
Yeah, that's true.
Before you go, got me involved in doing a YouTube channel. Like, that's what got me started in doing YouTube was NVIDIA and Palantir. Sorry, Tom, cut you off.
I think I put the wrong channel for you. That's not the right. That's not your English channel, right? The one I have on the screen.
You have the charts on the screen. At least what I see. I have an Hebrew and an English channel. The English channel is it's called Stock Talk with Michael Stocks, where I cover a weekly summary every week. So anyone that wants to look it up. It's a weekly summary, about 20, 30 minutes, covers the news, the headlines, anything you want to hear. And in the future, I might do more videos than that. But Tom, you're doing an amazing job. First of all, explaining to everyone that if you support from the river to the sea, it means that you're basically supporting the elimination of the Israeli country. And you're basically aligning yourself with the Nazis. So congratulations to everyone that's standing there and protesting and saying that. You've just became a Nazi, and rules around the world say that you're supposed to be in jail. Let's go back to Palantir. So Palantir is up how much pre-market?
18.5%.
Why not 20, Tom? Everyone's calling for 20.
I'm not going to say no to that, but we haven't sold at 6. We haven't sold at 20, not at 30, not at 40. So for us, it's before you jumped on, Dom said you heard just the tail end of what he said, which was like a 10x. We're not looking to sell before 150, 200 at minimum. So it's pretty much irrelevant, but it's kind of fun to see you get more validation from mainstream media and mainstream kind of fans. But we're not surprised. The people who've been following Palantir from day one, and I know, Micah, you've been following Palantir from day one, and Dom,
Yeah.
you wrote numerous articles. By the way, Micah, Dom called the entire NVIDIA pop way from the 80 all the way to the
Amazing.
top. He works actually in SaaS. He's an executive in
Nice.
SaaS, so you guys come from similar industries. So we're not surprised, but I want to pose a question to you gentlemen here. So what are the chances that this macro environment we're seeing right now impacts Palantir a little bit negatively? You know, if the entire market takes a poop, will we see Palantir drop? And if so, what's the new floor? What's the new ceiling, in your opinion?
I can go first since I have another live stream in 3 minutes, and I'm sorry I'm gonna drop off by then. If the markets will go down, Palantir with a high beta will probably go down even more, not because of their fundamentals, not because of risk of business, just because that's how the technicals of the market work. It doesn't even matter if you're a good company or a bad company. If the S&P goes down 2% and you have a beta higher than 1, then you will go more than that. It doesn't really matter. And
I think theirs
Palantir
is
is the
3, right?
volatile
It's
stock.
like 3. I think they have 3 beta or something
Yeah,
crazy like
it's a
that.
volatile stock. So if you cannot be a short-term holder of Palantir, at least from my perspective. Again, this is not financial advice, but short-term holders of Palantir will always jump on their stop losses, and we're probably always going to see losses versus gains. That's the type of stock. Now, if you're a long-term shareholder, if you understand the value that they can provide in the AI machine learning world, if you understand that the world is going to a place where artificial intelligence takes more and more, let's call it, weight in the world, in the business world, then Palantir is going to be a leader in that. Now, it's going to be long-term. It's going to be bumpy. The price might go down from 17 back to 12. Don't be surprised. That might happen if the stock market crashes by 20%. Palantir is going to crash by 50 to 60%, even if they get included in the S&P 500. Why? Because that is the nature of the beast. It's not even connected to Palantir. Now, do I think the management is focused on the right things? Yes. Do I think the product is focused on the right things? Yes. Do I think the fact that they're growing their commercial business versus their let's call it the government business is the smart thing to do from a valuation perspective? Yes. That doesn't mean that it won't be volatile.
I'm going to clip this as a short because it's like that 30 seconds. It's a great short. We're going to add some sound effects. Mike, I know you're late for your own
Yeah,
stream.
I'm running to my live stream.
Thank you so much. Thank you
Thank
so
you
much.
for having me. Thank you for inviting me.
Great. We'll have to sync up.
Thank
I'll
you.
make the
No
intro
problem.
for you guys offline because you guys should.
Excellent. That would be great. Thank you, Tom, for having me. Thank you, everyone. Bye-bye.
Okay, so he's a great dude, by the way.
Yeah. I definitely gotta pick his brain.
Your YouTube, like the level of gap between your capabilities as a stock analyzer and a YouTuber is mind blowing. So this is what you put up for yourself, this thing, which people are supposed to sign.
Yeah, well, it's like the link.
What's that? What?
I pulled up my channel because I haven't done a video.
You have a handle. It's called D Rinaldi.
Yeah. I haven't done a video in
1984.
I don't know, like 13 months. You know.
Yeah. So first of all, you can find Dom on Seeking Alpha. He writes some of the best articles in the industry. You can find Dom on YouTube at D Rinaldi 1984, and you should definitely check him out. I think your latest Seeking Alpha, the one that you did, was spot on, and you definitely deserve the clout. So with that in mind, we've been on for over an hour. Dom, thank you for jumping on for the tail end of this.
Thanks for having me.
What a great call. What a great call. Great guests, great call. And it's fun to see a little bit of green. Don't get freaked out if it flips. Don't get freaked out if it falls. Don't go overexcited. And, just stay the course.
Know why you're in the stock. Know yourself. Yeah. Know what's the goal. My goal is to have this as generational wealth that I can hand down to my kids and everything else. So just know why you're in the stock because it will be volatile.
Dom, I want to show you before we go. One of my community managers, he's asking if he can get a shout out, and it's definitely well deserved. So before we go, I want to show you guys this. This is another criminally undersubscribed channel. He has 800 subscribers, which means if all of you subscribe, you will have 1,000 subscribers at minimum. He makes really good videos, mainly on the technical analysis side, which is something that I lack in as far as skills, and I'm not ashamed to say it. If you want insight on technical analysis and you want to learn technical analysis, go check out Investory. This is the channel. It's youtube.com/Investory. I'm going to put it in the chat right now. He definitely deserves the shout out and the love. He manages the Discord community as well, which is not easy. It's right now in the chat. Go check him out. Give him some love. And with that, Dom, thank you again for jumping on.
Thanks for having me.
What a great call. I'm going to take a cold shower filled with just booze and ice. I'm talking about the bathtub. It's going to be just filled like to the brim with, with whiskey. I'm going to be in it for the next 3 hours. Thank you, everybody. And we'll see you in the S&P 500.